Hello, today I'm going to show you two clips about gold price manipulation, one produced by the German business magazine Macro. Now it's kind of interesting because in Germany it's now common knowledge that the bullion banks suppress the price of gold, and it's not a conspiracy theory, it's because it's been discussed out in the open, the strange trading patterns which basically serve as very, very damning circumstantial evidence, about as strong as the circumstantial evidence that would have convicted OJ of murdering Nicole Brown Simpson if the cops hadn't screwed up the tainting the evidence in that case. So I'm going to first show you that, and I did include English subtitles so you can understand what they're saying, because of course it's in German. And so it's the knowledge that they're suppressing in the United States that everyone knows in Germany now. And the second is interview with Rosa Abrantes Metz, who is part of the husband and wife team with her husband Albert Metz, who conducted all this information where they found very, very strange trading patterns in LIBOR that basically led to the conviction of a bunch of banks, always the same culprits, the big global banks, that led to about $6 billion of fines for LIBOR rigging. So they said they found the same kind of credible evidence that these same banks are also rigging gold prices lower. The interesting thing about the data compiled by the Metzes shows that these bullion banks were only interested in rigging the price of gold in one direction, and that was down, down, down. So between 2004 and 2012, in 6 of those years, they said a minimum of two-thirds of the price movements that immediately preceded the London PM gold price fix were downward. In 2010, it was even more atrocious, where almost all of the price movements that preceded or were in and around the London PM gold price fix were downward. They said 92% in 2010 were downward. So I'm going to present to you these two videos, but then please do stay tuned after you finish watching these videos, because I have something very, very important to present to you, in which I want to kick off a campaign that will take it to these banks that are manipulating the price of gold. So at first, here I present to you the videos.
Einen schönen guten Abend. Ich begrüße Sie zu unserem Wirtschaftsmagazin Makro. Der Kauf von Gold bedeutet vielen Menschen eine sichere Rücklage für schlechte Zeiten. Kein Wunder, dass auf dem Höhepunkt der Finanzkrise die Sparer Schlange standen vor den Goldhäusern. Schon seit Menschengedenken gilt Gold als ein Versprechen auf Verlässlichkeit und Beständigkeit. Aber ob dieses Versprechen immer noch gilt, daran gibt es erhebliche Zweifel. Denn allein der Blick auf den Goldpreis enthüllt Machenschaften in der Qualität eines regelrechten Wirtschaftskrimis.
London, wichtigster Goldmarkt der Welt. Ob der Preis des Goldes steigt oder fällt, entscheidet sich hier. Zweimal täglich telefonieren sich eine Handvoll Banken zusammen, um den Tagespreis des Edelmetalls festzulegen. So entsteht der wichtigste Referenzwert für physisches Gold, an dem sich vom Schmuckhändler bis zum Minenbetreiber alle orientieren. Beaufsichtigt wird das Fixing nicht. So viel Freizügigkeit hat offensichtlich zu gravierenden Preismanipulationen geführt. Darauf deutet eine aktuelle Untersuchung hin, die über Jahre merkwürdige Preisbewegungen festgestellt hat. Der Ablauf des Goldfixing ist problematisch. Es öffnet die Tür für Missbrauch, für Manipulation. Da gibt es überhaupt keine Transparenz, was da bei den privaten Telefonaten dieser kleinen Gruppe von Teilnehmern abgesprochen wird. Keine Transparenz darüber, wie sich der Goldpreis beim Fixing warum entwickelt hat. Kenner beklagen schon lange, dass dieses System besonders anfällig für Manipulationen ist. Am Londoner Goldfixing sind nur 5 Banken beteiligt, bislang auch die Deutsche Bank. Noch extremer der Terminmarkt. Hier, wo auf die Entwicklung des Goldpreises in den nächsten Monaten gewettet wird, werden noch ganz andere Mengen bewegt.
Wir haben eine Situation, dass dieser Markt von 3 wesentlichen Spielern in den USA, von 3 Banken dominiert wird. Diese Banken haben einen Marktanteil in der Größenordnung von 80%. Mit anderen Worten reden wir hier nahezu von einer monopolistischen Struktur, die natürlich dann auch Marktmanipulationsmacht mit sich bringt.
Und die wird offenbar reichlich genutzt. Der Terminmarkt, der eigentlich für berechenbare und stabile Preise in der Zukunft sorgen soll, wird von diesen drei, HSBC, Citibank und JP Morgan, beherrscht. Ihr Werkzeug: Gold-Wertpapiere.
Man kann einfach Papierschnipsel verkaufen und damit erzeugt man Angst. Dann aber eben auch Angst unter denen, die das Gold wirklich physisch besitzen. Man sorgt für Verkäufe und dann kommt es zu einer solchen Welle der Angst.
Immer wieder wurden so in der Vergangenheit Attacken gegen den Goldpreis geritten, oft mit massiven Kurseinbrüchen innerhalb von nur wenigen Minuten. Doch das Ganze hat noch eine viel größere Dimension.
Gold ist der Gegenspieler des kreditbasierten Geldes, also der Währungen, insbesondere des US-Dollars. Deswegen hat die US-Notenbank ein Interesse an einem schwachen Goldpreis und deswegen deckt die US-Regierung die Manipulationen von Privatbanken gegen den Goldpreis.
Seit Jahren gilt vielen die US-Notenbank als eigentlicher Drahtzieher. Schwach muss das Gold sein, damit das Vertrauen in den US-Dollar nicht verloren geht. Ein abgekartetes Spiel, zu beweisen ist das schwer. Doch wenn die Manipulationen am Goldmarkt nicht nur gebilligt, sondern gar gewollt wären, dann würde sich erklären, warum die Aufsichtsbehörden bislang so konsequent weggeschaut haben, trotz jahrelanger massiver Auffälligkeiten an den Terminmärkten, wie auch beim Goldfixing in London.
Die Deutsche Bank will sich nun übrigens aus dem Goldfixing zurückziehen. Aktuell gibt es aber noch keine andere Bank, die stattdessen weitermachen möchte. Es haben wohl zu viele Banken Angst um den guten Ruf, heißt es aus London.
Is the gold market fixed? It is, according to Rosa Abrantes-Metz. She's a New York University professor who specializes in antitrust, market manipulation, and financial regulations. You may recall that her previous investigations into the Euribor and Libor loan rates led to $6 billion US in fines for the likes of Citigroup, Barclays, UBS, JP Morgan, and RBS, Royal Bank of Scotland, as well as a promise by authorities to tighten regulations. She has credibility, and now she's turned her attention to the London PM gold fix. This is the rate set twice each day in trading by 5 banks. She says there are signs that benchmark is also rigged. Pamela Ritchie recently spoke with her, the financial sleuth, and began by asking her to explain what she was looking for in the gold market and what she found.
Well, in our study, my co-author and I were looking to spot prices of gold at the minute level since 2001 through the end of 2013. And we look at times of the day when prices move the most by looking at how much did the price move compared to the minutes prior to that particular minute and the minute after. And we find that the incidence of very large movements around the PM fixing is very large, larger than we would expect. And that finding occurs particularly since 2004. It is a finding that does not apply to the AM London fixing. The incidence of price movements has not changed significantly over time. Of course, in 2004, there were certain changes in the gold price setting for this benchmark that may to some extent help explain some of those movements, but they may also enhance the likelihood that wrongdoing may occur because of those changes. Particularly, a significant amount of derivatives were introduced in 2004, and therefore the benefit from abuse is larger. What we also found is that whenever those price spikes are large, they tend to be downwards. The majority of the times, price seem to move very quickly downwards and recover somehow quickly after the call ends.
So this is the afternoon call. It finishes up, and that's where you see the movement either during the call. This call is a call that is, there are 5 different banks on it, individuals from it. What is it in the system or the structure that you found perhaps there was some room for improvement on?
Well, there's several features of the gold setting for this benchmark that are worrying. The first feature is that, as you mentioned, there's only 5 banks participating on this call. 5 is a very small number. It is easy to collude when you have a small number of competitors. They are obviously discussing what the price of a commodity they have directly financial interests in should be. And that discussion is not public. To my knowledge, there is no public release of these calls. So we don't actually know what kind of conversations take place. And on top of that, proprietary trading is being undertaken when none of the rest of the market participants know the evolution of price during that call. So at the very least, this provides a significant amount of inside information to those participating in the call. And in addition, this benchmark is set by the major market players themselves, and there's a complete lack of oversight. So altogether, raises significant concerns because it is easy, if the intent is there, it is easy to abuse the system. And we know that type of behavior have occurred in other benchmarks. Mm-hmm. So when you couple all of these features with experiences with other benchmarks and the empirical evidence that we find in our paper, and in addition, we have a market in which it's a very liquid market. There's a lot of trades throughout most of the day. We do not need to have a benchmark set on private calls that are undisclosed to the rest of the market.
Do you think it's a matter of numbers? If there are more people involved, would it make it slightly more fair? Are there other things in motion now to create oversight?
Well, more participants would be better, but the reality is that we still have a benchmark administrator that has direct financial interest on the value taken by the benchmark itself, because a particular value may benefit or not derivatives positions, for example, by its members. So my view is that the benchmark needs to be completely reformed. It needs to be based on trades that are registered, for example, with a depository institution. Those trades have to be visible to everybody else, and they should be, the benchmark itself should be based on those trades over a large amount of the day, not just a few minutes in which everybody knows that the benchmark is being set, and therefore, if they have the intent to manipulate, they could more easily do so.
Your paper hasn't been published at this point, but when do you expect it to be published, I guess? And also, do people agree with you? You obviously speak to colleagues, people in the industry.
The paper has not been published. It is not finished yet, but some of its content has been disclosed in a complaint by a law firm, in addition to other empirical evidence. And with respect to whether I have been getting support for my findings, I would say that I have talked to a large number of market players, and I would say that maybe 99% of them do agree that there is something wrong potentially during the PM fixing, and even those who may disagree to that extent do think that more transparency in this benchmark would be better.
Do you think the various scandals that you've already mentioned, LIBOR, Euribor, and so on, have they shaken the market's confidence in benchmarks?
I think so, and I think that for a good reason. Not all benchmarks are equally bad, and not all benchmarks are bad. But benchmarks such as LIBOR, Euribor, TIBOR, and gold, and potentially, and also silver and others that are based not on actual trades that are visible to all of the market players, but that has their prices set by a small group of competitors with direct interests, are problematic. And those benchmarks, mostly those, should be reformed. I think we should be concerned with the integrity of these, and I think we should all hope that regulators get it right when in developing new rules for benchmark setting.
Okay, so I hope you enjoyed those two video clips, and as I promised, I'm going to tell you what we can do. So I want to launch a letter rating campaign against all the bullion banks that are allegedly have manipulated the price of gold. So the 5 that were typically involved in the London AM PM gold price fix, and then the silver price fix in London as well, were Bank of Nova Scotia, Barclays, Deutsche Bank, HSBC, and Societe Generale. And as you saw in the documentary from the German business magazine Macro, there are 3 banks that control 80% of all the trading on gold futures. That's Citigroup, JP Morgan, and HSBC. So when we see these same banks, again, that are responsible for rigging Forex markets, responsible for rigging LIBOR, that the spotlight on their criminal behavior, it won't hurt them financially because the fines that they get fined are just ridiculous. For example, JP Morgan failed to properly report bond trades to the industry's price tracking system more than 11,000 times. And you know what they're fined? They're fined 3 minutes of profits. 3 minutes of profit. So in this case, there's really not a disincentive to keep doing what they're doing. Like, why report your bond trades if you can basically rig the bond market, by not reporting the trades if you're only going to get fined 3 minutes of profits. But on the flip side of that, when there has been a spotlight continuously shined on a bank's illegal behavior, it has proven to be effective in curtailing that criminal behavior. For example, in the Forex markets, there were 2 currency pairs that were consistently rigged, and that was the US dollar Japanese yen, the US dollar Canadian dollar pair. And it doesn't surprise me at all that the US dollar Japanese yen pair was consistently rigged, because that rate needs to be rigged in order to keep inflating the artificial bubble of US stock markets and to keep gold and silver prices down. But basically what would happen at the 4 p.m. close of Forex markets in London on the last trading day of every month, you would see initial surge in those currency pairs right preceding the 4 p.m. close, and then you would see a very quick reversal. Now, the reason I'm mentioning this, the criminality of the banks and rigging the Forex markets, was because once that criminality was exposed, once these banks were fined, we actually found that these surges and the quick reversals at the 4 p.m. close in London on the last trading day of every month sometimes completely disappeared, meaning that the scrutiny worked. It helped to dissolve the bank fraud and Forex markets. And I think we can accomplish the same thing in the gold and price fixing that these bankers are doing. So that's why I wrote a letter to one of the law firms that has filed a class action lawsuit against these banks for fixing the price of gold and silver. So the law firm that I'm addressing is Kirby McInerney in New York, and the lead attorney for this class action lawsuit is David Covell. So, sorry if I pronounced that last name incorrectly, but I already have the letter. It's already sealed in the envelope and I'm sending it off. But the reason I'm mentioning this is because I put the template to the letter in the video description on YouTube below. So please check the video description. You'll see the link. Just click on it. You can download the template. And I urge everyone watching this video to go download the letter and mail it off. It will only take 5 minutes. Now, you can read the letter, but I'll tell you quickly what's in the letter. The letter basically asks these law firms, the law firms all basically are communicating with one another, that, you know, the various law firms have filed class action lawsuits. So we only need to send it to one and the message will get to all the others. But the reason, what is in the content of these letters is that I've also asked them to extend the class action lawsuit to the 3 banks that control 80% of the trading on the gold futures market daily, and that would be HSBC, Citigroup, and JP Morgan, because a lot of the gold price manipulation occurs in the futures market as well. So it doesn't matter if they just get rid of the the silver price fix is already gone as of August 14th, but it doesn't even matter if they get rid of the gold price fix in London as well. We also need to get rid of all this fraud that's happening in the futures markets. Otherwise, we'll still continue to have fraud. But the spotlight does work, because I did see that, in my opinion, that the bankers were trying to push the price of gold down to $1,200 this month. And you've seen resiliency at $1,280 time and time again. Have they stopped manipulating? No, of course not, because every time it goes up to $1,300, you see it get pushed down. Because yesterday it went up to $1,305 and it got pushed down to a low, I believe, of $1,292.80. So that's a huge range right there. That's $12, because just around this price range on 8 futures contracts, if they can push the price down $7, they can make about almost $250,000 on that price movement. So you know, obviously they can make tens of millions of dollars when they're able to move the price $20 or $30, and they haven't been able to do that in a while. So will they? The end of the month is not here yet. It remains to be seen, but we can do something to at least stymie these banks from being able to take the price of gold and silver down. So I urge everyone, it'll take you 5 minutes to go download this letter. Not only does it urge these law firms to add these other criminal banks into their class action lawsuits, but it also gives them, I provided great sources of data if they're not looking at. One would be Dimitri Speck of GATA, who's a commodity analyst who did great work looking at the price surges, the majority of those price surges being downward, almost all of them being downward in 2010, right in and around the London PM gold price fix. So please do participate in our campaign. This is something you can be proactive. You can help fight these criminal banks. And not only that, you can hurt them where it hurts, because these fines, like I said, the fines, ridiculous fines these regulatory agencies give these firms never hurt them, because it's only a small sliver of their profits they gain by the criminal behavior. But where it can hurt them is if we can create a short squeeze, because we don't allow these banks to push the price of gold down, and create a short squeeze where we can help push the price of gold up. Well, you know what that does to all the shorts that these bullion banks have in the futures markets. It will make them all expire worthless, and it will really hurt them where it helps. So please, 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 let's pound these banks into the ground. Let's get this campaign going. And I don't want to see hundreds. Let's do it in thousands of letters to these law firms. Because like I said, it'll take you 5 minutes. It's one way to try to end the economic misery that these bankers are spreading all over the world. Because gold is linked to economic freedom. If you don't understand that, go look at the article I wrote several years ago about why this is so. So if you have been suffering economically in the past couple of years, you also want to take part in this campaign, because it will help liberate the economy. It will help create jobs. So let's get as much participation as possible. Okay, thanks a lot for watching. Please spread the word. And as always, remain intensely curious.